10 Tips for Successful Cryptocurrency Investing. Hey everyone, welcome back to our channel. Cryptocurrency investing has gained immense popularity in recent years, drawing attention from both seasoned investors and newcomers to the financial markets. The decentralized and innovative nature of cryptocurrencies has created a unique investment landscape. However, navigating this landscape requires a strategic approach and a thorough understanding of the market. In this video, we will explore 10 essential tips for successful cryptocurrency investing. 1. Educate yourself. Before diving into the world of cryptocurrency investing, it's crucial to educate yourself about the technology, market dynamics, and the various cryptocurrencies available. Understand the basics of blockchain technology, the backbone of most cryptocurrencies, and explore how different projects utilize it. Familiarize yourself with key terms such as wallets, private keys, and consensus mechanisms to build a solid foundation for your investment journey. 2. Diversify your portfolio. Diversification is a fundamental principle of investing, and it applies to the world of cryptocurrencies as well. Instead of putting all your funds into a single cryptocurrency, spread your investments across multiple projects. Diversification helps mitigate risk, as the performance of different cryptocurrencies can vary based on market conditions, technological advancements, and regulatory developments. 3. Risk management. The volatility in the cryptocurrency market is well known, and prices can experience significant fluctuations within short time frames. Implementing effective risk management strategies is crucial to safeguard your investment capital. Set realistic profit and loss targets, use stop-loss orders, and avoid investing more than you can afford to lose. This approach ensures that you can weather market downturns without jeopardizing your financial well-being. 4. Stay informed about market trends. The cryptocurrency market is dynamic, and staying informed about market trends is vital for making informed investment decisions. Follow reputable news sources, subscribe to industry newsletters, and join online communities to stay updated on the latest developments. Understanding market sentiment, regulatory changes, and technological advancements can provide valuable insights into potential investment opportunities and risks. 5. Long-term perspective. Cryptocurrency markets can be highly speculative, and short-term price movements are often influenced by market sentiment and trading activity. While day trading and short-term speculation can be profitable for some, adopting a long-term perspective is generally less stressful and aligns with the fundamental value of many blockchain projects. Evaluate projects based on their long-term potential, technology, and real-world use cases. 6. Security measures. Security is paramount in the world of cryptocurrency investing. Safeguard your digital assets by using secure wallets, enabling two-factor authentication, and keeping your private keys offline. Be wary of phishing scams and only use reputable exchanges and wallets. Regularly update your software and firmware to protect against potential vulnerabilities. Furthermore, consider diversifying your storage solutions by utilizing both hardware wallets and secure software wallets. Hardware wallets such as Ledger or Trezor provide an additional layer of protection by keeping your private keys offline and away from potential online threats. Remember to create strong, unique passwords for your wallet accounts to enhance security. Stay vigilant against phishing attempts, which often involve deceptive emails or websites trying to trick users into revealing sensitive information. Always double-check the authenticity of the websites you visit and be cautious when clicking on links. Additionally, consider using virtual private networks, VPNs, to encrypt your internet connection and add an extra layer of privacy to your online activities. By implementing these comprehensive security measures, you can significantly reduce the risk of unauthorized access and protect your cryptocurrency holdings from potential security breaches. 7. Understand regulatory environment. Cryptocurrency markets operate in a regulatory landscape that is still evolving. Stay informed about the regulatory environment in your jurisdiction and the jurisdictions where the cryptocurrencies you're interested in are based. Regulatory developments can impact market sentiment and the legal status of certain cryptocurrencies. Adhering to regulatory compliance also reduces the risk of legal issues in the future. 8. Evaluate team and community. When considering an investment in a particular cryptocurrency, evaluate the project's development team and community support. A strong, experienced team with a proven track record increases the likelihood of successful project execution. Additionally, an active and engaged community can contribute to the project's growth and sustainability. Explore online forums, social media channels, and official communication channels to gauge the project's community involvement. 9. Technical analysis. While fundamental analysis is essential for evaluating the long-term viability of a cryptocurrency project, technical analysis can provide insights into short-term price movements. Learn the basics of technical analysis, including chart patterns, indicators, and candlestick patterns. Technical analysis can help you identify potential entry and exit points, allowing for more informed trading decisions. Additionally, familiarize yourself with key technical analysis indicators such as moving averages, relative strength index, RSI, and Bollinger Bands. These tools can offer valuable signals about the market's momentum, overbought or oversold conditions, and potential trend reversals. Keep abreast of market sentiment by analyzing trading volumes, as increased volume often precedes significant price movements. Understand how to interpret various chart patterns, such as head and shoulders, double tops, and triangles, as they can provide insights into future price trends. Experiment with different time frames, from short-term intraday charts to longer-term daily or weekly charts, to gain a comprehensive understanding of the market dynamics. Moreover, consider combining technical analysis with fundamental analysis to make well-rounded decisions. Remember that while technical analysis is a powerful tool, it is not foolproof, and market conditions can change rapidly. So always exercise caution and be prepared to adapt your strategies based on the evolving market landscape. 10. HODL mentality. The term HODL originated from a misspelled word hold in a Bitcoin forum post, and it has since become a mantra for many cryptocurrency enthusiasts. The HODL mentality encourages investors to resist the urge to panic sell during market downturns and hold on to their investments through volatility. While the market can experience short-term fluctuations, adopting a HODL mentality can align with the long-term potential of promising projects. Cryptocurrency investing presents exciting opportunities for financial growth, but it comes with its own set of challenges. By educating yourself, diversifying your portfolio, implementing effective risk management, staying informed about market trends, adopting a long-term perspective, prioritizing security, understanding the regulatory environment, evaluating teams and communities, incorporating technical analysis, and embracing the HODL mentality, you can position yourself for success in the dynamic world of cryptocurrency investing. Remember that every investment carries risk, and it's essential to make decisions based on careful consideration and a well-informed strategy. Please like and subscribe my channel and press the bell icon to get new video updates.